This is Trade Alive with IUX, where markets come alive and trading gets real. Let's go live.
This podcast is brought to you by IUX Trading Platform, elevating your trading experience.
Imagine a man driving a taxi on the night shift in New York City. He's just an ordinary guy, struggling to make ends meet. No one could have guessed that the same man would soon become a legendary hedge fund manager, generating an average annual return of 21% for 28 consecutive years. His name is Bruce Kovner. Starting with just $3,000 borrowed on a credit card, how did he turn that tiny sum into a multi-billion-dollar empire? The answer is not reckless bravery. The answer lies in his ability to learn how to fear the market. He turned a near-fatal mistake into the ultimate shield for his wealth. Welcome to Trader's Journey, a part of Trade Alive, brought to you by IUX Education. Today, we take you through a story that sounds like fiction but is entirely true. The story of a former taxi driver who discovered that risk is something to be respected, not something to be ignored, and how he used the art of risk management to conquer Wall Street. If you are ready to learn the path from zero to legend, let's begin the journey. The story of Bruce Kovner did not happen in a vacuum. It began in an era when the U.S. economy was critically ill, the 1970s. In those days, the world was facing a crisis known as the Great Inflation. Oil prices were skyrocketing, the cost of living was rising every day, and the value of the dollar was crumbling. For the average person, it was a time of hardship. But for speculators in the commodities market, it was a gold rush, an era of the most violent price swings in history. Cut to our protagonist, Bruce Kovner. While the world was in chaos, his personal life was equally adrift. After walking away from his PhD at Harvard due to a severe case of writer's block, he was living the life of a starving artist in New York. Few people know that aside from academics, Kovner had another special talent. He was an accomplished pianist who had studied at the Juilliard School. Classical music taught him two things: discipline and rhythm. He learned that music isn't just about hitting the right notes, it's about precise timing. And this sense of rhythm would become a key element in his future trading. But in reality, music and political philosophy couldn't pay the bills. To afford his tiny apartment in New York, he had to work driving a taxi on the night shift, driving passengers through the neon lights and the chaos of the big city. The real turning point happened one night, not while he was driving, but while he was reading books on finance. He noticed a connection. He found that the prices of gold, oil, and grain did not move randomly. They moved according to interest rates and the geopolitical conflicts he had studied his whole life. In that second, a light bulb went off in his head. He realized that the financial market was not a casino. It was a reflection of world politics in action, a mechanism governed by logic. And this was the subject he knew best. Excited by this discovery, he spent a year studying until he was confident. But there was one problem. He had no capital. In 1977, he decided to take the biggest risk of his life, not a gamble, but a bet on his own knowledge. He took a cash advance from his Mastercard, $3,000. In the 70s, that was a lot of money for a taxi driver. It was the last bit of money he had. He transferred it all into a trading account to buy his first futures contracts, unaware that he was walking straight into a massive storm that would teach him the most painful lesson of all. Shortly after opening his account, Kovner spotted an opportunity in the soybean market. Analyzing the supply and demand data, he found that soybean stocks were dangerously low. A severe shortage was imminent. He decided to use his $3,000 to buy soybean contracts immediately. But let me pause here to explain the risk he was taking. In the futures market, there is something called leverage. The $3,000 he put down did not just buy $3,000 worth of soybeans. It controlled contracts worth $40,000 or even $50,000. This meant if he was right, his profits would multiply, but if he was wrong, his entire principal would vanish in the blink of an eye. At first, the gods of luck seemed to be on his side. Soybean prices skyrocketed, driven by the shortage, just as he predicted. His portfolio exploded from $3,000 to $40,000 in just 6 weeks. Imagine that. A gain of over 1,000% in a month and a half. For a taxi driver, this was money that would take him years to earn behind the wheel. Success came too fast, creating a demon called overconfidence. Kovner started calling his broker, boasting about his brilliance. When warning signs appeared that the shortage was ending, he ignored them. He refused to take profit. He thought, "I am a Harvard intellectual. I see the game better than anyone." But then disaster struck. One morning, the market panicked. A massive sell-off began. The moment the market opened, soybean prices crashed straight into what is called limit down. Limit down is a trader's nightmare. It is a market mechanism that halts trading when prices fall too fast. Imagine you are in a burning building. You run to the exit, but the door is locked. You scream for help. "Sell this for me, get me out." But no one is buying. No one opens the door. Kovner sat pale-faced by the phone. He called his broker, his hands shaking, his voice trembling. "Sell it now, get me out." But the voice on the other end replied coldly, "I can't do anything, Bruce. The market is locked. There are no buyers." Day 1 passed. All he could do was watch his portfolio value drop. Day 2 passed. The market opened limit down again. The profit of $40,000 was melting away before his eyes, like ice on a hot stove. The stress ate him alive. He couldn't eat, he couldn't sleep. He started calculating in his head, if it drops another day, how much will I have left? Will I have to go back to driving the taxi? The feeling of being a genius vanished, replaced by the feeling of a victim, helpless, waiting for the mercy of the market to just let him out. Finally, the exit door opened when the market resumed trading. Kovner didn't wait a single second. He ordered to liquidate everything, selling his entire position to stop the bleeding. When he hung up the phone, he looked at the final number in his account. From a peak of $40,000, he was walking away with about $23,000. Over $17,000 of profit had vanished into thin air because of his own stubbornness. Many might say, "Hey, that's still a huge profit, from $3,000 to $23,000. But for Kovner, he felt completely defeated. He sat staring at the ceiling of his rented room, asking himself, "What am I doing? I survived this time because of luck, but what about next time?" He realized that trading without a backup plan is like driving a race car without a seatbelt. One accident could take his life. This pain transformed him from a gambler into a student. He knew he needed a teacher. So he took his trading track record, which was volatile but profitable, and applied for a job at Commodities Corporation, a legendary trading firm of that era. And there, destiny introduced him to a mentor who would change his life. His name was Michael Marcus, a top trader who was himself a student of Ed Seykota. Marcus saw the intelligence in Kovner, but he also saw the fear. One day, Marcus called Kovner in and taught him the most important lesson. He said, "Bruce, you have excellent analytical skills, but if you are always afraid, you will never be rich. The secret isn't just about avoiding losses. It is that you have to bet big when you have high conviction, but you must cut your losses instantly when you know you are wrong." He taught him the principle of position sizing. You must limit the risk per trade to the minimum, never more than 1% of your portfolio. But you can hold many positions at once if your macro view is correct. This teaching unlocked Kovner's full potential. He learned to combine caution from the soybean lesson with the courage to run trends from Michael Marcus, becoming the perfect blend of a rock-solid defense and an aggressive offense. And this was the beginning of a new legend. Armed with the lessons from the soybean disaster and the mentorship of Michael Marcus, Bruce Kovner was no longer an amateur. He was a weapon. He spent a few years honing his skills at Commodities Corporation, making millions for the firm, but he knew he was destined for something bigger. In 1983, he took the leap and founded his own hedge fund, Caxton Associates. This was the beginning of an era that would cement his legacy. Now, you might ask, did he just get lucky with soybeans and then ride the wave? The answer is a definitive no. At Caxton, Kovner didn't just trade one market. He traded the world. He became the definition of a global macro trader. While others were staring at a single stock chart, Kovner was looking at the entire chessboard of the global economy. He traded currencies like the Swiss franc and the Japanese yen. He traded interest rates. He traded oil. He traded copper. He described his trading style not as gambling, but as seeing a picture of the world. He would say, "I have the ability to imagine configurations of the world different from today." This means he could visualize a future where the dollar crashes or where oil skyrockets long before it happened. And because he learned his lesson in 1977, he never bet the house on a single vision again. During the Caxton era, he navigated through the 1987 Black Monday crash, the burst of the Japanese bubble in 1990, the dot-com crash in 2000. While other funds collapsed and panic spread, Caxton Associates stood firm, like a fortress. Kovner didn't just survive, he profited, because every time the market became volatile, he remembered the limit-down nightmare of his taxi driving days, and he knew exactly when to get out. Let's look at the scoreboard. The $17,000 that vanished during that soybean trade turned out to be the most valuable tuition fee Bruce Kovner ever paid. Under his leadership, Caxton Associates became one of the most prestigious hedge funds in history. For 28 consecutive years, the fund generated an average annual return of 21%. Compound that over nearly 30 decades, and the numbers are staggering. The man who once had to borrow $3,000 from a credit card just to open an account is now a multi-billionaire with a net worth estimated at over $5 billion. He owns historic mansions in New York. He's a major patron of the arts and music, and he never has to drive a taxi again unless he wants to. But the true measure of his success is not the private jets or the mansions. It is the fact that he survived. He survived the high-leverage game that destroys 99% of people who try it. And he did it by building a set of iron rules that we can learn from today. From the incredible journey of Bruce Kovner, from the days he drove a taxi to the day he became a multi-billionaire, we can extract 3 vital life lessons that lie at the heart of his success. Lesson number 1, the golden rule of stops. This is the most famous piece of advice from Kovner, and it separates the pros from the amateurs. Please listen closely to this quote. Place your stops at a point that, if reached, will reasonably indicate that the trade is wrong, not at a point determined primarily by your maximum dollar loss. Let me translate that. Most new traders say, "I can only afford to lose $50, so I'll put my stop loss here." Kovner says, that is wrong. The market doesn't care about your wallet. You must place your stop loss at a technical level, like a support line. If the price crosses that line, the chart proves you are wrong. If that technical point is too far away and risks too much money, then do not move the stop closer. Instead, reduce your position size. Trade smaller, but trade correctly. Lesson number 2, watch out for correlations. Kovner warns against the illusion of diversification. He often saw traders buying gold, buying silver, and buying the euro all at once. They thought they had 3 different trades, but Kovner knew all 3 were actually just one bet, betting against the US dollar. If the dollar strengthened, all 3 trades would crash simultaneously. So always check, are your positions actually different, or are they all moving to the same music? Lesson number 3, technicals plus fundamentals. Remember his background in political science? Kovner teaches a hybrid approach. Use fundamentals, like supply shortages or interest rates, to decide what to buy, to find the direction, but use technicals, the charts and price action, to decide when to buy, to find the timing. If the fundamental story is great, but the chart is falling, he waits. He only strikes when the story and the chart sing the same song. In conclusion, the ultimate lesson we can draw from Bruce Kovner's life is not just about financial charts, it is about the human spirit. His story proves one undeniable truth: your background is not your destiny. Bruce Kovner started as a doctoral dropout. He had no finance degree. He drove a taxi at night to survive, but he never used his lack of money or status as an excuse. The market is the great equalizer. It doesn't care who your father is. It only cares about your discipline. Bruce Kovner transformed his life from behind the wheel of a taxi to the peak of Wall Street, not because he was fearless, but because he learned to respect the risk. He took his failures, he took his pain, and he turned them into wisdom. Remember his final advice for longevity? He who lives to run away lives to fight another day. In trading, the survivor is the winner. We hope the story of this taxi driver who beat Wall Street inspires you to dream big, study hard, and trade safely in the year ahead. If you don't want to miss these life-changing stories and valuable lessons from global legends, please subscribe and hit the notification bell. For Trader's Journey, a part of Trade Alive, brought to you by IUX Education. See you in the next episode. Goodbye.
You've been listening to Trade Alive with IUX. Ready to put these insights into action? IUX is here to power your next winning trade